2017 was an incredibly busy year across the board, both in the US and globally. We started to see towards the end of the year, and I think we're seeing right now into 2018, someone had coined the phrase global synchronous growth. Really across the board in every geography, you have almost a Goldilocks scenario where you have strong public market activity, strong M&A activity, and strong anticipated GDP growth, which is really a great scenario for asset valuations, which they're at record highs, as well as M&A activity is what we're seeing. This is a scenario that is largely unprecedented in recent history as far as the global synchronous growth. Globally, there were a handful of key factors that have led to where we are today. First and foremost, I think you have GDP growth, really healthy economies. I think leading the way is India with anticipated 2018 GDP growth of about 7.5%, followed closely behind by China at 6.5%. The US GDP growth is scheduled to be between 3 and possibly even as high as 4%. And even places like Brazil, which I believe in 2017 didn't even crack 1% GDP growth, are budgeted in 2018 to be around 3% GDP growth. So healthy economies across the board, even in Europe, where it was really uncertain what was going to happen with Brexit and the impact on the European economy. But Europe is actually, I think in 2018, looking to be sort of a bust-out economy. Number two, there's significant capital raised for investment activity. There is a significant amount of assets or capital flying into the alternative investment space, which is private equity and other investments, whether it be private equity, family office, sovereign wealth. And as a result, though, what that has done is further contributed to the growth in all these economies. And unfortunately, the byproduct of that are high asset valuations. I also think another key component to what's contributing to the global economic growth and global M&A activity really are low interest rates, near historical lows, both in the US and around the world. So you have access to a lot of capital, and that capital is fairly cheap. So that's like throwing fuel on the fire when it comes to economic activity, development, growth, and GDP growth. So the combination of those factors, global GDP growth and expected growth, capital coming into the alternative investment sector, as well as low interest rates and access to capital and cheap or inexpensive debt, are driving asset valuations to significant levels. And that we're seeing that across the board. I think as you look at 2018, it could potentially become a tale of two cities. The one hand, high asset valuations and significant GDP and economic growth globally are a huge positive. And it has also unfortunately created a huge risk that we're in a potential bubble. I think when you look at not only the high asset valuations, I think obviously the unknown geopolitical risk that's out there that no one can predict is another significant risk. And also when it comes to interest rates and inflation. Inflation is starting already in the early parts of 2018 to creep upward. I think if inflation continues to grow at a more rapid pace and interest rates rise to combat that, we run the risk of a potential boom-bust cycle where we may have to raise or governments or countries raise interest rates to combat inflation at too fast of a pace. And unfortunately, that can result in a potential shock to the financial systems around the world. So I think, from my opinion, there are three major risks to the 2018 global M&A market and the global economic outlook. I would say the main risk are high asset valuations, coupled with the risk of significantly increasing inflation and therefore interest rates, and lastly, the unknown geopolitical risks around the world. Any one of these things need to be monitored, and any one of these things can potentially derail what is a very heated economic and significantly growing M&A environment in 2018. I say heated, I don't say overheated. I think there's room still to run, room still for growth. When you look at the economic cycles, I think the US and China are probably leading the way when it comes to being at the tail end of the cycle. But there are other economies like India, like Brazil, and some of the other emerging markets, even Europe, where they're still in the cycle, in the growth cycle. in the recovery cycle, and they present significant opportunities going forward. So as far as our global team at Alvarez and Marsal, we are cautiously optimistic when it comes to growth and global M&A activity in 2018.